created the mess we're in, and now you're saying, sorry, trust
earn
us.
as much as $50 billion each.
Wall Street got bailed out, and Main Street didn't.
Other banks were taking these ideas and applying them in ways that they'd never expected.
What if I told you that the most powerful force in global finance today isn't a government or a central bank, but a private company that most people possibly wouldn't even be able to name? A company that quietly manages more money than the GDP of almost every country on earth, over $10 trillion. A company whose proprietary risk system is so vast and far-reaching that it can model the ripple effects of a pandemic, a war, or a financial crisis before they unfold. This company is BlackRock. No commercials, no storefronts, no consumer brand. And yet, when BlackRock moves, entire markets shift. When it speaks, governments listen. This is not just a financial firm. It's the invisible nervous system powering the global economy. Now, I know you're wondering about BlackRock's global presence and how it came to dominate the world of finance. Also, what kind of impact could this shadow giant have on India's financial future? And then lastly, perhaps the most obvious question of them all. Why had you never heard of BlackRock before? Stick around until the end of the video to find out. The story begins in 1988, inside a modest Manhattan office, not some gleaming skyscraper. 8 former executives from Blackstone, led by Larry Fink, struck out to build something radically new. Fink, then a seasoned Wall Street banker, was still haunted by a catastrophic mistake, a $100 million loss at First Boston from a wrong-way interest rate bet in 1986. That single event nearly derailed his career, and it lit a fire. He became obsessed with risk, not just managing it, but mastering it through data and analytics. The team called their new venture BlackRock. No flashy name, no logos, just a mission: to build the most sophisticated risk management platform on earth. By 1994, BlackRock had separated from Blackstone. By 1999, they were public, and within a decade, their assets under management had grown from zero to over $150 billion. But the world had no idea about how much bigger they were about to become. BlackRock built a brain. They called it Aladdin, short for Asset, Liability, Debt and Derivative Investment Network. But Aladdin wasn't just software. It was and is a real-time predictive command center for the global economy. It ingests data from across the world: economic indicators, interest rate movements, geopolitical news, and stimulates how trillions of dollars in assets might respond under different scenarios. War in Europe, a sudden spike in oil, pandemic shutdowns. Aladdin models it all before the damage is done. Today, Aladdin is used by over 200 of the world's largest financial institutions, central banks, sovereign wealth funds, insurers, even government agencies, including parts of the US Federal Reserve. In total, it supports risk modeling for over $21 trillion in assets, more than double of what BlackRock itself manages. Aladdin didn't just make BlackRock smarter, it made them indispensable. BlackRock didn't just grow by managing more money, it swallowed empires. In 2006, it acquired Merrill Lynch Investment Managers, doubling its size overnight. Then in 2009, during the depths of the global financial crisis, it made a defining move, buying Barclays Global Investors, including the jewel of passive investing, iShares. With iShares, BlackRock became the undisputed king of ETFs, the fastest growing investment vehicle of the 21st century. Today, BlackRock controls roughly 35% of the global ETF market, giving them enormous influence over how capital is allocated across economies. But they didn't stop there. By 2024, BlackRock had pushed into private equity, real estate, infrastructure, and even digital assets. In a landmark deal, they acquired Global Infrastructure Partners for $12.5 billion, adding another $100 billion to their alternative investments. They also helped launch the first US spot Bitcoin ETF, pushing Wall Street further into blockchain territory. While rivals struggled through market volatility and regulation, BlackRock stayed ahead by buying the platforms others would eventually need to survive. Power follows money, and when you control $10 trillion, power becomes inevitable. BlackRock holds major stakes in nearly every name you know: Apple, Microsoft, Amazon, ExxonMobil. In many countries, it's the largest or second largest shareholder, alongside Vanguard and State Street. Through proxy voting, it influences CEO pay, mergers, climate strategy, and board composition. In effect, BlackRock has boardroom influence across the entire S&P 500. Now, governments also come calling. In 2008, the US Treasury and Fed hired BlackRock to help unwind toxic assets from Bear Stearns and AIG. In 2020, during the pandemic, they again turned to BlackRock to manage emergency bond purchases, some of which were ETFs that BlackRock itself offered. This dual role as both manager and market maker has raised eyebrows. Critics warn that when a firm owns pieces of nearly every competitor, it risks distorting competition. When it advocates for ESG and climate action, but still funds oil majors, it invites accusations of hypocrisy. So is BlackRock a steward of long-term value, or an unelected economic power with no checks and balances in place? India, Asia's fastest growing major economy, isn't just a strategic opportunity for BlackRock, it's a priority frontier. As of 2024, BlackRock has re-entered the Indian asset management space in a joint venture with Jio Financial Services, a subsidiary of Reliance Industries, India's most powerful conglomerate. The goal? To launch a new asset management company with $300 million in initial capital and long-term ambitions to dominate digital-first investing in India. This marks a second attempt. BlackRock had previously operated in India with DSP Mutual Fund, but exited in 2018. Now, with India's booming retail investor base and the rise of fintech platforms, it's getting big again. But it's not just about mutual funds. Through iShares and global ETFs, BlackRock already has indirect exposure to top Indian firms: Reliance, Infosys, ICICI Bank, and HDFC. Its influence also flows through foreign portfolio investments as it allocates global capital into India's bond and equity markets. So what could this mean for India? More global capital means deeper markets and lower capital costs for Indian firms. But it also means greater vulnerability to foreign exits and decisions made in New York, not Mumbai. And as BlackRock introduces AI-driven investment platforms and risk analytics, Indian asset managers may find themselves competing against algorithms, not just each other. In short, BlackRock isn't just entering India, it's quietly embedding itself into the very structure of how money flows through the Indian economy. And finally, why haven't you heard of BlackRock? It's a fair question. How can a company with $10 trillion under management stay mostly invisible to the public? The answer lies in what BlackRock doesn't do. It doesn't advertise, it doesn't sell to consumers, and it doesn't need your vote or your approval to survive. BlackRock operates behind the scenes, managing money on behalf of institutions, pension funds, sovereign wealth funds, corporations, and governments. You don't buy from them, but your retirement fund might be run through them. They don't run retail banks or apps, but they influence the architecture your bank relies on. They've deliberately built their business on quiet power, favoring influence over attention. As a result, while CEOs, presidents, and central bankers dominate headlines, BlackRock dominates decisions, often from the shadows. So if you've never heard of them before, that's not an accident. That's the model. BlackRock has no throne, no anthem, no national flag. But it has something more permanent: infrastructure-level influence. It normalized passive investing, shifting trillions from human stock pickers to low-cost indexes. It built Aladdin, the digital scaffolding now used by hundreds of firms. And through iShares, it reshaped how the average person, through pensions, 401ks, and ETFs, interacts with global markets. CEO Larry Fink insists that they're just stewards, obligated to serve their clients' long-term interests. But when your voting shares can tip corporate policy, when your software models entire economies, and when your advice is sought during every financial crisis, you're not just a steward, you're a quiet architect of the modern world. Subscribe to our channel for more deep dives into the silent giants shaping your future. And until our next video, stay curious, stay unaligned.